In a real life planning scenario, a unique once in a lifetime opportunity to cap their property taxes required some creative tax planning to get their adjusted gross income below a certain level just for 1 year only. What are the circumstances? What are the strategies we employed? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. A mother, a parent of a friend of mine reached out just recently with a very unique and yet urgent financial planning need requiring some sort of like creative tax planning solutions. Here's the scenario, okay? This real life planning scenario that you may not align with, or you might not see this occur in your life. However, the need for, something's going on in my financial life. I need to go through every possible opportunity to reduce my adjusted gross income for this 1 year only. That is a fairly common scenario. So here's what's going on. This is a recent widow, and I know the family. I know the family very well. So even though we're not doing comprehensive financial planning for mom, I've been involved in her financial situation, helping her through just this awful time. Just a few years ago, lost her husband. From a financial standpoint, even though they've lived well within their means, they never had a lot saved up. So situation is she's been widowed for a few years and is planning on retiring next year at near the end of 2026 when she's going to be age 67. Okay. She is still working full time. She makes about 60 grand a year, but has a survivor pension. That's another, call it $1,000 or so a month. And she turned this on a while back just to obviously help with income and it was an opportunity. So turn that on. Well, she's got some dollars saved up, about $200,000 saved up for retirement, and is currently funding her workplace retirement plan. Happens to be a 403B. She's contributing about 10%, so more than is needed to get the match, but what she feels like she can do with managing cash flow and saving up for the future. In addition to those retirement savings, she actually does have a fully funded emergency fund, more in savings than really one might ordinarily recommend. And part of that has come from life insurance when her husband passed, but also her father passed away just about a year after her husband, and she received a little inheritance as well. And so really she's about 6 figures in the bank, which is a lot, but so close to retirement, it hasn't really been on her mind to deploy those dollars into tax shelters, just knowing I'm going to be using those as soon as I retire. So those are the details. Now here's where it gets interesting, and this is what caused her to reach out. In the county in which she lives, they have a temporary property tax cap that she took advantage of. And many people did. If you qualified, you needed to be a certain age and have some other circumstances. But if so, then you were allowed to apply for a property tax increase cap, if you follow me, right? So where each year as your property is reassessed so that, to determine what the property taxes are, there was this temporary cap that you could get where you couldn't see your property taxes or your assessment go up by more than 2% a year for these 3 years. Well, she took advantage of that. And this next year is the year in which that 3 years is up. Well, in the county that she lives in, there is another property tax cap that is only available for seniors. Okay, you've got to be age 65 or older. You can only apply once. And in order to be eligible, not do you need to just be 65 or older, but your adjusted gross income needs to be below a certain level. And for her, as a single individual, needs to be below $60,000. So here was the issue. She obviously, financially, she's piecing it all together, but there's not like there's abundant resources. Yes, there's some huge, benefits and strengths that she has financially, but there's not an abundance of resources. And so where anyone would take a look at this opportunity and say, well, is there anything I can do, this once in a lifetime chance right now at the beginning of retirement to qualify for this extended property tax cap, which it would operate the same way, where yes, every year her assessment could go up if her property value goes up, but it couldn't go up by more than 2% a year. Basically, this could be extended throughout the rest of her life for as long as she's in this home. But she's got one chance to apply. And so where anyone, yeah, you'd want to creatively figure out, well, can I qualify? Is there a way to get my adjusted gross income below a certain level? Just because she's a widow and her financial circumstances even more important. So we had sort of an impromptu financial planning meeting talking through the 6 areas of her financial life to then explore, well, what creative tax planning strategies exist to help you qualify? Well, you know, there's 6 areas to your financial life, my financial life, her financial life, everyone's financial life. And the big idea isn't that these are separate and distinct parts of your finances that you need to keep separate. No, they're actually more interconnected than most people realize. And when you're faced with big financial decisions like this question and this situation, you've got to look at all 6 areas of your financial life to there find synergy. So knowing what her cash flow was like, and how much, is cash flow tight, or are there extra resources, knowing how much there is in the bank, knowing her retirement goals, what her tax picture was, all of that needed to be intertwined. So we were able to quickly rule out a bunch of other strategies, and here's what we came up with. It's a strategy I've talked about before on these Next Wise Step videos, but the strategy was, if we can increase her 403b contributions pre-tax by approximately $1,000 per month starting in January, then throughout 2026, by the time we get to the end of that year and she applies for this new over 65 property tax cap, that should bring her adjusted gross income down below or to that $60,000 so that she would be eligible and be able to qualify for this extended property tax cap. Now you might say, she's only making 60 grand. That's probably hard to live on. Where could she come up with an extra $1,000 a month to be funding into the pre-tax 403b? Well, here's how we're going to do it. We're going to do the math to figure out, well, what, she's contributing 10% right now. How much would she need to contribute so that an extra $1,000 goes into her 403b? And we're going to calculate that percentage and we're going to have that, have her increase that January 1, right here in just a couple of weeks. She's going to increase that going into her 403b. And then at the same time, we're going to start an automatic withdrawal. And automatic is key here. Withdrawal from that savings account that I said is probably got more cash in it than she really needs. And if she was draining that and consistently draining it a lot, that would definitely make her nervous, right? But by calculating and setting it up automatically so there's less likelihood that she's going to overreach, transferring $1,000 out of that savings back to her checking just to replace her lower paycheck because of these increased 403b contributions. It's like the shell game where we've just sort of shifted dollars from one area to another to qualify for a unique one-time tax benefit without making an enormous sacrifice in her overall net worth or financial plan. Now, we double-checked to make sure, well, she's not going to hit the maximum. She's not going to cap out on how much she's able to contribute to the 403b. No. She'll stay below those limits. But then the other thing is, because of the money that she has in the bank account or because of her job, it's possible. What if she has more interest earned on her taxes than what we planned for? Or what if she gets a bonus? Or something else changes where her income's just a little bit higher and we contributed this extra $1,000, but it still wasn't enough? Well, we also look to see, well, where is their margin? Just in case something changes, do we have any other options to be able to lower her income? And yeah, we could get to a point where we then do, if we find out she's 1,000 over the limit or 1,500 over the limit, we could have her contribute to a pre-tax IRA right before she files her taxes. A pre-tax IRA is called an above-the-line deduction, and it lowers your adjusted gross income. And you might say, in her situation, wouldn't you want to contribute to the Roth? Doesn't that make more sense? I would say yes. But for this once-in-a-lifetime opportunity to reduce her adjusted gross income, to lower her property taxes for the rest of her life, it would make sense to use that option if we needed it. So very unique, maybe isolated situation. However, would you ever find yourself in a need where because of, oh gosh, receiving an inheritance or a big payout or having some big capital gains where you find yourself, okay, this is a unique tax year. I got to lower my adjusted gross income. What are my options? Would you know what to do? Would you be able to come up with a list of all of those options? And is someone Does someone have the perch in your financial life to look at all 6 areas, to be able to rule out the good ideas and help you go after the great ideas? That's what you need a certified financial planner for. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.